Welcome to the Victory Podcast.
Hey Victors, welcome to this episode of The Victory Show. If this is the first time you're joining us, I'm Rachel League with Bestseller by Design. Our founder, Travis Cody, is the best-selling author of 16 books, and we've had the privilege of helping hundreds of business consultants, founders, and entrepreneurs write and publish their own best-selling books as well. Through that journey, we've discovered a fascinating pattern. Most businesses really struggle to break past the seven-figure revenue mark. On this show, I sit down with some of the world's most successful CEOs, leaders, and business owners to uncover the strategies they used to scale way past that mark, so you can do the same. So get ready for some deep insights and actionable takeaways that you can implement in your life and business starting now. Today's guest is Rob Matzkin, a seasoned entrepreneur, investor, and strategic advisor with a powerful track record of building, scaling, and guiding businesses across industries and continents. Rob is the managing partner of Singularity Ventures, a VC firm with 50 million AUM, investing in cutting-edge technologies in automotive, cybersecurity, and AI. He's also involved in structuring and executing complex deals in the sports, art, and entertainment sectors in partnership with global family offices. Over the course of his career, Rob has helped lead and advise on over $24 billion in business operations, bringing a rare strategic lens to high-stakes investment and growth initiatives. He also leads the Rob Matzkin Group, an advisory firm where he serves as a fractional chief revenue officer and chief strategy officer for corporations and family offices. His specialty, scaling ventures, crafting smart revenue strategies, optimizing performance, and driving long-term value, all with a deeply intentional, results-driven mindset. With over 16 companies founded and multiple exits under his belt, Rob now blends his operational experience with his coaching practice, helping founders unlock clarity, overcome burnout, and build businesses aligned with both purpose and performance. Rob, welcome to the show.
Thanks so much. That was quite a mouthful. Thanks for sharing all that.
Well, you've done so much. I mean, really excited to have you on the show today. And speaking of accomplishing so much, you've launched 16 businesses. That's an incredible number. What motivated you to keep starting new ventures even after achieving success with earlier ones?
Well, I mean, I don't look at it as so everybody's like, I'll say this. I used to not think I was a very creative person because I didn't know how to draw, right? And my creativity is really expressed through business and through entrepreneurship where, I guess it's Michael Gerber would call it an entrepreneurial seizure, where I have an idea, and the ideas are the easy part, but the fun part is the execution and the building out. So really, I keep having these ideas, and I want to go out and do them and express them and try them and have fun with them, and bring my friends along and seeing what we could do together.
What was the first company you built that really took off, and how did that experience shape the way that you approached the rest of them?
Yeah. So I think it was probably the fifth or sixth entity that really started taking off. That was called Booze Carriage. We invented alcohol delivery in the US in 2010, when last mile delivery was difficult and hard. And I didn't think Instacart or TaskRabbit had a chance because I didn't think anybody would want to pay extra to get things delivered. But turns out I was wrong on that. But really, it just took off where we found a niche. We found a product that people wanted, which was things delivered within a half an hour, and they're alcohol delivered right now. And we went out and delivered it and executed it, and it was fun and it was sexy and it was a lot of hard work, and it seemed really cool, but it was just a lot of hard work in the background. So that was the first.
Tell me about the process of going from ideation to execution and how you scaled.
Yeah, I mean, whether it was Booze Carriage or any company, it was, the ideation part, that's kind of the fun part where you kind of get to really be clever and think of the next 5 years. And what really then comes to mind through the ideation phase is, what one simple thing do I need to prove? What is this minimal viable product that I need to showcase to not only myself, my team, and to investors that, hey, there's actually something here that people really want? And how do we just ruthlessly and simplistically prove that out and just drive that? So that's really, I think, step one to any org. I think most people get the most lost in that, where it's like, oh, I need to enact my huge vision, and they make it really big. But doing something really, really well, really simple, and proving that out, and then bringing people on and bigger teams and more is the way I look at things.
What did that look like for this company specifically?
What did that look like for this company specifically? For Booze Carriage, it really looked like, okay, we need to deliver alcohol, right? It's like booze delivered. Okay, great. So now what do we need to do? All right, how are we going to deliver that? How are we going to make it legal? All right, let's figure out those two questions. Well, how do we make it legal? We can't actually sell alcohol. How do we deliver alcohol, and how do we actually process and transaction? Well, we partner with local liquor stores. Okay, they do the deliveries. They do that. Okay, now it's how do we actually get users? Where do we acquire users? All right, how are we actually going to do that? And how are we going to facilitate the delivery? So all these questions pop up and checking them off one by one, right? So at Boost Carriage, it was, all right, we're going to have the local liquor stores do deliveries. We're going to give them, they're going to process transactions. We're going to do some sort of rev share combination thereof. And then we keep moving forward, right? And then new problems arise, like how do we do the development? How big of a tech stack do we need? Do we need an app or not? And along, and you just keep going down the rabbit hole of what challenges do we need to solve? How do we get to market? How do we get to market as quick as possible and as lean as possible? And then how do we get people behind us to invest? That answer your question a little bit?
Yes. And so how different was the end product of Booze Carriage from that MVP where you were really just trying to prove out the concept?
At Booze Carriage, coincidentally enough, it was actually really similar. Like after the first month of me refining it, it didn't adapt too much. It was still that core concept. Now, was that a good thing or a bad thing? We eventually were acquired. Could we have done much better in the acquisition and grown much quicker and bigger if I was 27 at the time, if we adapted and changed and adjusted? Maybe. I think in most of my other companies that I've pivoted quite drastically from the original concept. So I don't know if that was because I nailed it or that's because I was so arrogant and had so much sugar in it.
That sounds like it was a success. With those other companies that you made pivots in, what was different? What made you want to change?
Market demanded it. Like really simply, the market demanded it. So I remember there was another company that we were doing. It was an education and technology company, and we raised quite a bit of money to like partner with social media influencers, and we are going to build all these educational products with them. And turns out working with social media influencers sucks. Them doing any sort of partnership is a nightmare. They just want to be paid. That wasn't going to ever work. That wasn't ever going to scale. And we're never going to see product market fit. Oh, it also turns out social media influencers, a lot of their audiences don't actually drive business. So that was just, and we found that out in like 2016. So that was just a colossal fail of a go-to-market strategy and a thesis. And we had some really great core underpinning tech. And I remember realizing, I think a few weeks before everybody else, it wasn't going to work. And I started whiteboarding a solution. And we had a new solution where we could take our core IP and figure out, well, who else really would value what we've developed? Business consultants. And we really pivoted hard into business consultants and created a really thriving business that we were able to raise quite a bit more money around that showcased the ability for business consultants to really thrive with our technology.
You've mentioned fundraising a couple of times. Tell me, when in the process of building out a company do you think now is the right time to bring in outside capital, and how critical has that been to the success of your businesses?
Yeah. So, I mean, the easy answer is as soon as possible. So capital is the lifeblood of everything, right? But it's not capital per se. It's cash flow. It's how are you actually going to use the capital to actually deploy and solve problems, right? So capital doesn't solve any problems, but it allows you more resources to do things quicker. So when is the best time to raise capital? It depends, and it depends on the idea. If you have something super deep tech, some ideas just need capital from the beginning. Now, how are you going to do that with just an idea? In 2019 or 2018, that was pretty easy in Silicon Valley. You just have a tech idea and, you had the right credentials, or you went to Stanford or Wharton or wherever it is. And, you'd be able to get a few $million with an idea and a team. I think today's way different. I think fundraising at the speed of AI is just intimidating and difficult, right? Because of how quickly things are moving. But I say this, when I look to raise capital, is my philosophy, and I have a few fundraising philosophies that I work with my clients on, but it's how do we have a core underpinning idea? How do we prove and showcase that idea that we have real data here? We don't just have an idea, we don't just have a team, but we have a real product. We have some semblance of, hey, we've made a test and we validated that test with real market results. Therefore, we have what's called really we're in a seed round of funding where now we have results. We have the first semblance of, hey, there's something here. There's some semblance of product market fit, and we could prove and validate our theses, right? Not only that our product works, that we have a market opportunity, that the market likes it. Now, sometimes it's building out a product And sometimes that's not building out a product. Sometimes that's just creating a waiting list for people that really want that product, right? And sometimes it's we built out a minimal viable product and people are paying us and we're doing well with it. It really all depends. But I do think in fundraising today, this concept of pre-seed funding, which my definition of is you just have that idea with not much else, is really there's very few angel investors that invest in it with very few dollars. Seed funding, which is I have the first semblance of an idea, and I've actually been able to prove some bit of that. That seed funding, that's where most of the angel investment capital is. And that's where I think you need to go after.
Was there ever a time that you struggled to raise capital, and why do you think that was?
Always. I still don't think it's easy. And if I thought raising capital for a startup was hard, holy cow, raising capital for a VC firm is like 10 times harder. And especially in today's day and age. It's never easy to raise capital. What makes it easier is the mindset that people aren't giving me money so I could go fulfill my dreams. They don't care. People aren't giving me money to go fulfill my purpose. They don't care. People aren't giving me money because they think my ideas are good. They don't care. Why are people giving me money? And why are people giving me money and knowing it's extremely risky? Now, I've done this a few times. People like me, they know me, they trust me, they trust my reputation, they trust that I can execute. But even for me, why are they giving money? Because they want to see an X size return. They probably want to see a 100X return, right? When it's easier to get money is the closer I am, the more I've de-risked something and proven to them that this is going to make them that 100X. And the more I could de-risk that and do that and unbalance the scales versus this is super risky and no semblance of success, the more I could tilt that this way, the quicker I'm able to raise and the more success I'm able to have fundraising. And that's for me, that's for my clients, and I think that's for anybody.
Give us an example of when you've been able to do that really crisply.
When have I been able to do it really crisply? Never.
Or an example that comes to mind of when you thought, well, I really nailed it at pinning down that messaging that spoke to them.
Yeah, I mean, sure. Right. I look at crispy as like, oh, nailed it. Money just comes running. But I think there's quite a few different times, right? When I really have product market fit where people are just coming to me or coming to my clients and they're saying, this clicks. And the total addressable market is there. When all the metrics, right? Everybody's like, oh, you need all these metrics to raise money. You need the total addressable market. You need like your go-to-market to be effective. You need your cost per acquisition low. You need your lifetime value of customer needs to be high. You need to have a consistent and scalable way of bringing in those clients and proving that. When, in my world, you could hear it's more from a SaaS-driven world with those metrics and a B2B SaaS world for that. But with that in mind, when all your numbers are there and people get it and you're not exaggerating and they can't poke holes, that's when everything just starts to click. And the biggest thing with fundraising and investors is everybody's a herd investor. As soon as you get one great person to come in, the round will really solidify. So a lot of people, so there's two ways of going about that, right? There's one of, hey, I want to raise, let's just call it a $2 million round or a $10 million round. And I get somebody and they come in for $4 million and they're my anchor investor and they come in and they're big enough name and then the other $6 million will flow. The other way of doing it, which is what people have had to do the last year, is do small enough rounds where you don't necessarily need that one big check, but you get that one check that's the critical mass that I know I could get $75,000 check. I know I could get $100,000 check. I bring that in and my round is $250K, $300K. And I bring that in and I just kind of keep extending the round or extending that note out and doing things a little bit differently that way. But there's many different ways of skinning the cat. So anyway, when it's easy to answer your question, all the numbers are aligning. And it's right. Remember, investors are really investing in 1% of what they see, 0.01% of what they see. I think most VCs, if they're making 12 investments, let's say 10 investments for the sake of my back of the envelope math, will see 6,000 decks a year come across their email, come across their desk. They'll maybe look at 2 a day. They'll maybe look at 400 a year. They'll take meetings with 100 and invest in 10, right? So, or let's say invest in 6. So my math is easier, right? So that's 0.01% that they're investing in. We're conditioned to say no. We want to say no. We want to find that one gem. How do you be that one gem, that one diamond in the rough?
It sounds like unlocking that capital really does, particularly in the SaaS context, open the faucet to be able to scale. I understand the meeting the metrics on the paper. Tell me a little bit about how pre-funding, particularly with something that can be cost or capital intensive, like building software. How did you get some of that early traction? Was it bootstrapping your own personal capital? Was it doing sort of a Wizard of Oz style product where you didn't have the tech, but you did it? Tell us what that looked like.
All the above, right? So my booze carriage, I sold my car. I had $22,000 of capital to kick it off. I was doing some side projects on the side. I had a little bit of savings, but I leveraged everything to go do it because I believed in myself, right? And I Wizard of Oz things. And our first software build, I found a product that I was able to like reskin and bastardize, and it was good enough. And it cost me $3,000. And then everybody said it wasn't good enough, and I spent another $300,000 on dev that never worked. But it's all the above, right? Here's the thing: it's climbing a ladder. Everybody wants to like skip these rungs in the ladder. But the way I look at it now, it's really simple. It's how do you climb one rung at a time? And everybody's like, well, how do I prove to investors what to do? It's really simple. It's what metrics, what KPIs, what are you measuring yourself by? You get to set the ground rules, right? What are you measuring yourself by that denotes success? Now that success metric better be something valid and better be something impressive, but you get to set that goalpost. Now show that you could get to that goalpost. And if it's a good metric, people will come in because you've reached that goalpost and you've proven something really substantial, right? So and however you got to do that. It's guerrilla marketing, it's Wizard of Oz, it's, and Wizard of Ozing, it could look like many different things, but it's, you could put up a landing page. You could say you have this really clever AI that produces these fancy like spreadsheets or whatever, these great financial reporting, and you could just take in that and you could spend 12 hours doing it yourself and compile it yourself and say, here's your output. Sorry, it took so long. We needed more computing bandwidth. And you could give that to somebody and say, an AI did it. And that's what your AI is going to do. And you can say, look, people are paying me $500 to do this. When we have the AI, we're going to get 10,000 people because of that. And we should absolutely do this. We could automate it. Look how cheap we could do it. Right. So there's many different ways of doing it. Now you've proven that people pay you for that, i.e. then investors should come in because your financial projections are there, right? The other thing that makes fundraising really easy and straightforward is everybody thinks it's a deck. Everybody thinks it's a one-pager. Everybody thinks they're going to say these magical words and they're going to like be like Fiddler on the Roof and like everybody's just going to like fall in a line because they said these magic words. Now, by the way, there's a few investors, Adam Newman, Elon Musk, Steve Jobs. They have something called reality distortion field. When they speak, people listen and they like bend reality and everybody thinks it's true. I don't know how they're able to do it, right? They're some of the greatest fundraisers of our time, no matter what you think of them. Now, are you going to be able to do that? Especially in your first startup? Probably not. Now, here's what you can do. And here's what and depends what region. If you're in New York, this absolutely applies. Everybody really comes from Wall Street money. They speak, they listen through numbers. So your financial projections, your financials are going to be everything. And I could look at financials and go, I could tell you exactly what this business does. You didn't even tell me what this business does. They sell a widget. This is how they grow. This is what their team is. And I get their business because the numbers speak to me and the numbers tell my story. So if you tell the story through numbers, it's everything, right? So your financials are everything. And it's not about, I'm going to be at this number or that. It better have a nice little growth path. It probably should grow 20 to 40% month on month. You should probably be able to validate that, but you need to tell the story through numbers. That's what I think most founders miss. And they downplay that.
Do you think there's a big difference? I know you mentioned New York, Wall Street between East Coast versus West Coast VCs and their approach to.
I think every city is different based on the characteristics of that city and how the wealth in that city was created, right? So San Francisco, everybody's a tech founder. Everybody's worked in tech. It's dreams and aspirations and change in the world, and everybody drinks their own Kool-Aid. On the West Coast, and it has insane inflated projections, and you can see I'm not from the West Coast because of how I speak to it. But and I'm definitely New Yorker through and through. In New York, it's the ecosystem has definitely gotten a lot more sophisticated since I built there, and it's less of this now, but it is still rooted in the big wealth is still rooted in Wall Street. rooted in numbers, right? I'm based in Miami these days. Miami is a whole different ecosystem, but the real money in Miami is still real estate development, right? Now, is that who's necessarily investing in startups? Yes and no. So I think every city has its own different characteristics, and whether you're in, Berlin or Tel Aviv, and that also holds true, right? And all those things are going to kind of be slightly different based on what ecosystem you are and what investors are in those ecosystems.
Smart. Aligning your business to what those investors are looking for might be a good strategy.
Or maybe you don't, if you can't, then it's also like investor market fit, right? Maybe you should be in that pool. If your idea is really lofty, maybe you should be on the West Coast and in Silicon Valley. It's always the best place to raise. It's always the noisiest, or Austin or wherever else you feel that you will have the best traction.
How important do you think it is in this new remote friendly hybrid world to physically be in an ecosystem like that versus with all of our Zoom connectivity, being able to reach out to investors in different locations?
So it's certainly way less important. I'd like to think, personally, I'm in my own deluded reality that it's not so important because I'm fully remote, because I want to be fully remote, and I have a much better quality of life doing so. I think there's absolutely, especially a first-time founder, to be in an ecosystem of people going through the same thing as you and having a support system that's readily available, always available, that's forcing you to be in that world, I think is a huge advantage for a first-time founder. And I'd highly encourage that. Right. Luckily for us now in every city that's there. Now, investors used to be like, no, you need to be down the road from me. I need to be able to walk into your office at any time. I've never have, and I never will, but I need to be able to think I need to do that. Now that attitude has broken quite a bit, and people will invest anywhere in the right company with the right metrics, with the right idea. But it sure does make it easier when you can go to pitch events and pitch nights and know the ecosystem and get intros and like create momentum there. And I tend to spend quite a bit of time traveling and going to events, but now also events, and there's 2 events every month for 8 months of the year that you could be going to kind of create that. So it depends if you want to be on planes all the time or just be local. It's up to you.
Tell us about that early support system that you gathered around yourself to help get those businesses off the ground in the early days.
I still do, right? My friends happen to be everywhere now, and I still have that support system. But I think for me, in the beginning, it was imperative. Mine was actually was built around WeWork. I was in a WeWork office space. It was when it was like this, I think I was in the second space in New York City, or their space ever. It was just a really amazing environment with really great entrepreneurs that I still know today. I have some really great connections there, both in WeWork corporate and throughout everybody that was in that space. But it was always nice knocking on my neighbor's door and, commiserating or shooting the shit or having a drink at night. And I always had a full bar because I was in the alcohol industry, so everybody came to me. So when we didn't want the tap beer, we did the hard alcohol. And commiserated that way, because it's freaking hard. It's 16-hour days and it's a grind. And you don't know if it's going to be successful or not. You're sacrificing everything for it. So it's a grind. So having that support system is huge. And a lot of what I do with my clients today is just having that wisdom and somebody having your back that believes in you to really make sure you're making the right decisions is really where I spend a lot of my time, more so than anything else.
And I'm sure with all the different hats that you've worn, you have good perspective of different angles of viewing a business to give someone that perspective. But how did you personally keep yourself going aside from having that support? Like, what self-talk, if any, did you do? And how did you know when it was the right move to keep moving forward or when you should pivot?
Yeah. Well, first off, the conversations that you'll have with yourself are the most important conversations you'll ever have. The definition of crazy is, I guess, people talk out loud to themselves. Like that also defines being smart, but we're going to have conversations with ourselves. And, I think cutting off the negative self-talk and nipping it in the bud and just taking action. And how do you know what you don't know? And that's what makes it scary, right? And the thing that scares me the most is there's a picture out there that depicts this really well. But the greatest failures in life never know how close they were to success, right? And there's this picture of like this guy chipping away, and there's diamonds right on the other side of the wall. The wall is like paper thin, and he's been chipping away at it, and he walks away. Right. And you never know when that next break is and the next breakthrough is. And you just have to believe and keep going until you don't. I mean, I have friends, I have co-founders that have been going 10, 15 years. I've been slogging away at it. And, how many companies, like I remember I saw Monday.com, which is a huge company now. I remember meeting them in Israel. I lived out there for years. I remember meeting them. I think they just closed their A. It took Roy 8 years to close the A round. Then closing the A 3 years later, they were at like a $10 billion valuation. And everybody's like, overnight success, 12 years in the making or 11 years in the making, whatever it was.
Yeah, right.
And it's like, we do that with everybody. Yeah.
Right. It's easy to glorify the successes and act like it all came together naturally when you're not in the mind, you are there for the whole journey.
Like you're just getting by, you're just getting by, you're just getting by. I asked this question to a client of mine literally just before this call. And the way I look at things is that I came up with this concept for Bond Summit, which is our purpose-driven summit that we do twice a year. And it's called a ninja move. And I kind of just renamed something that's been out in the ethos for a while, but it's you're looking straight up at a mountain and you're getting your climbing gear on, you're going to go ascend that cliff and you're going to be like, I'm going straight up. It's going to be like amazing, right? Somebody's going to go climb El Capitan and it's like, I'm going to get there. And they get to the top and they're like, oh my God, that was like the most epic thing ever. And then there's just people sitting there and they're like, how the hell did you get there? You're like, oh, we hiked. It was an easy hike. They're like, huh? So it's like, where's the hiking trail? Or it's like Pikes Peak in Colorado. Where's the bus tour? Right. So everybody looks through these soda straws and looks at things myopically. And it's like, what's the ninja move? Not that, where's the easy button? Where's the easy path? That maybe we're just looking at it in such a way that this is the only way to do it. We're climbing this cliff. Maybe there's a hiking path. Maybe there's a bus path, right? So it's looking eyes wide open and zooming out and going, is there a better way of doing things? Is there an easy way of doing things? Because again, it's climbing a ladder. It's not, we need our North Star. We need to get to here. But how are we going to get there one step at a time? And the next thing, it's not that. It's like, let's go in this direction. But what's that next thing that we need to prove? Not all this. We just need to prove to the next investor that we have the next milestone that's really great, that our product just needs to do this to get this many new clients to do this. So sometimes it's simplifying things. I forget the original question, but hopefully that addressed it for you.
Yeah. It sounds like you have a unique skill for the milestone setting in a way that it's lofty enough that it inspires investors that there could be that 100x return, but it's also something that feels achievable. How do you find the balance between something that's exciting, but you think you can hit?
Well, it's the difference between a 5-year goal and a 3-month goal, right? And it's having a 3, 6, 12, like it's having goals every quarter that you could hit and hit repeatedly. Like I think the best example of this is Adam Newman at WeWork, right? Everybody's like, WeWork raised so much money. What did Adam do that was mind-boggling? The fact that he's able to do this. Adam went, first of all, he was a co-founder in another company that did it. His partner didn't want to do WeWork. They wanted to do something else. They want to do what they're doing. So Adam knew the numbers, right? And Adam went to an investor and he goes, I'm going to get this much per square foot, which is 3 times what you make per square foot. And when I do this, you're going to give me $10 million. And the investor goes, if you do that, I'll give you $10 million. Well, guess what? Three months later, he did that and they gave him $10 million. And he kept doing that. He goes, when I do this, you're going to give me $100 million. And I go, if you could do that, we'll give you $100 million. So it's coming up with a huge promise, but you can fulfill on it. It seems huge to the outside, but you control the insider knowledge that you could execute on it. So that was like the brilliance of how WeWork was able to raise all that money, but it happens all the time. So it's, yes, set a milestone that's impressive, but that you can make me, right? And then keep doing that every few months. And you're going to impress investors because they're going to be like, wow, I believe in you. Wow, if you could do these numbers, this is impressive for this stage. And I can see you getting to there.
Yeah, it sounds like the key to unlocking that scaling capital really is understanding the mindset of an investor. And I know now you sit in an investor seat, but how did you get into that mindset when you were first starting your companies and learn the language of VCs?
I did. I was fumbling around in the dark and I didn't get it. So that's why I keep preaching it to people. Like the thing, like nobody really understands an investor's mindset, right? There's different mindsets with the angel investor. You have a dentist that's playing around in startup world and, thinks he's, playing the lotto, right? Or you have a sophisticated VC, or you have a first time VC fund. The thing that most people don't get is a lot of VC funds, if they're a $10 million fund, just the way they work, they have very little operating capital. They're working on 2%. They're getting paid $200,000 a year. Half of that is going to their lawyers. They're eating ramen noodles just like you. They have to be in that business for 10 years. These are things that I had no idea until I became one. They have to do that business for 10 years to succeed or fail. I could fail and they still have to do it. And if they don't raise another fund, well, they're stuck doing this on the side while they go get another job, right? They're going to make, out of a $10 million fund, I don't know, is going to make what, 20 investments and leave a little bit for follow-on. Maybe they'll only make 10 investments. They have to have 2 that have huge returns. So if they're talking to you, they're betting their life, their career on you. They're not looking to take a chance. They're not looking to take a risk. It's your job to calm their anxiety and fully trust that you're going to be successful. I didn't get that, right? I didn't get that even into the last few years. My job is to be so trustworthy in execution that they believe in me that we can't fail. Not that how good we are and look at the opportunity.
I think it's such an interesting and valuable point around listening to those around you. You talk about the founder experience can be a lonely journey. That's why it's important to have this community around us. But it's not just about listening to your customers and what do they need, but thinking about to get this scaling capital, how did they think? How do you de-risk them? What is the risk profile that they're measuring against? And I love how you put it that they are risking their careers in talking to you. And we always think about the risk sitting with the founder, but it's really on both sides of the table and being able to de-risk the venture, not only for yourself, but for those that you're asking to back you with capital is a really important point.
Yeah. People really ask me a lot of times what I do with the consulting and why I do it. And it's so simple. It is this. It is you're speaking, not only trying to speak a language you don't understand, and you might be speaking it, but you don't understand what's actually happening. And there's all these things happening in the background and games being played that you don't even know about. So there's what you don't even know, you don't know what you don't know, and seeing the unseen in this investor world. And it's not just about, I built the tech, I built the product, and I built some financial plans. People are going to come because I have a great idea. It doesn't quite work like. So it's really, there's so many nuances of how do you actually get to a point that is really impressive. That gets investors to say yes. People do it every day, and I'm not saying it's not trying to make it came out really like intimidating. If you're raising money, if you're raising capital right now, I think it's really straightforward what you need to do. You need to go execute and prove to the world that you have something great. And the more proof points you have, again, the more you're going to de-risk something, and the more you're able to show how big the opportunity is. People are going to see the upside, right? So you control those 2 factors and people will invest.
Yeah, the importance of storytelling in a way that really connects with your audience, complemented by that execution in that Wizard of Oz style, I think is a great way to make sure that you're able to get that scale.
Well, what are the best stories? The best story, like every Hollywood ending, I mean, a lot of them, they come from reality. Right? We just embellish them a little bit to, make them a little bit sexier. But the best stories are the ones rooted in reality. If you're not rooted in reality and rooted in execution, there's nothing there.
Rob, what does victory look like to you today?
Yeah. So, I mean, for me, victory looks like it's truly getting to do every day what I love to do and having a great balance in life where I'm able to do things I love at work and make a difference in the things that I do and have a great income and investment portfolio and still able to literally be present and smell the roses and have a good time in life. So having that true balance is everything to me.
Mm. And what piece of advice would you give your younger self?
Trust yourself. Trust the path that you're on. Trust that the universe has your back and trust others.
I love that. Rob, thank you so much for your time today and a wonderful conversation.
My pleasure. Thanks for having me.